So, what you will see in this slide is our volumes have grown at a very healthy pace. FY22 to FY23 was obviously a very sharp growth. FY24 was a year of consolidation with subsidies changing rapidly in our industry. But in FY25, you will see the data for the 3 quarters. You can see that there is an almost 45% growth in volumes in the quarter ending December as compared to the same period last year. So you will see these numbers here, 74,000 growing up to 100 almost 8,000 units. So very solid growth in volumes now that the industry has stabilized in terms of subsidies and government policies. Total income obviously has also grown in these 3 quarters. But the biggest story really is coming through in the adjusted gross margins, where our adjusted gross margins have almost doubled from 9% to 19% in this 1 year. This has been possible on the back of incredibly strong cost reduction happening via our engineering team's continuous efforts on value engineering. Also the introduction of Ather Vista, which has landed very successfully in the market. And finally, the continued success of our ability to sell software, Ather Stack, independently. The ability to sell Ather Stack independently has added that much more to our margins and that much more to our profitability, which has continued to help our margin story in a big way. So, just to summarize, strong work on engineering on cost reduction at a vehicle level, Rista landing really well in the markets, solid success of software's independent sales in the market, and obviously our premium positioning, our ability to command the right price in the market from our customers has all come together to deliver this strong margin growth story in FY25. And all that has obviously translated into EBITDA margin improvement also, which has improved from -34% to -23% in this 3-quarter period. So very strong improvement in EBITDA margin also. And you will see that there some of our operating leverage is starting to play a role with every passing month there, because volume is also overall going up. So that in a snapshot is the overall financial overview for the company. FY25 is shaping up to be a good year with solid volume growth, more than solid adjusted gross margin growth, and on the back of that, EBITDA improvement, helping us move towards our journey of eventual break-even in the coming years. With that, I think we are at the end of our presentation. Let me just quickly maybe summarize a few things. So I just want to, for all of our benefits, summarize our key strategies. First is expansion of the product portfolio with Rista recently and the EL platform products in the coming years and the bikes eventually. Improving our unit economics, we are introducing LFP battery packs across our portfolio, which will help our cost structures even further and allow us a more resilient supply chain for lithium-ion batteries. And with the EL platform, our costs are going to improve even further. So strong unit economics, hopefully in the coming years, even better. Strong expansion of product portfolio, expanding and deepening our distribution. So we will obviously go deep in South, where Ather is already a leading brand. But expansion in a big way in the northwest and the eastern markets, particularly in the western and the northern markets, which buy a lot of convenience and family scooters like the Rista. So you should expect a healthy amount of distribution expansion for us. Fourth is improving operational efficiencies and manufacturing capabilities with what Sapna talked about, with the new plant coming up in Chhatrapati Sambhajinagar, which will also have higher amount of backward integration. We drive better cost efficiencies and we drive better scale for the business. Securing cell supply chain through partnerships, long-term supply agreements with partnerships in India, ensuring that long-term our cells are locally sourced. Strategic partnerships and acquisitions, potential across the product portfolio. And finally, continuing to invest in building the Ather brand. We very strongly believe that continued growth of our industry, the EV industry, requires us, especially players like Ather, which are pure play EV players, to take the story of EV to every customer. We have all the right ingredients, we have good products, we have the good ecosystem, we have good answers for charging, we are investing in solving category barriers around range, charging, battery life, warranties, everything. it's time to also take that message to every customer. So expect us to also continue to invest in brand building in a healthy way in the coming years. So those are our key strategies. A very quick overview of our management. So me and Swapnil lead as co-founders and the CEO, Swapnil the CTO. Along with us, Sohail, Ravneet as a business head, Harendra as procurement head, Sunita, Sanjeev. These are our CXOs. A solid amount of experience and vintage and tenure at Ather. Many of our CXOs have been with us for 5, 6, 8, 9 years also. And our board of directors, along with many of our investors, also very strong independent directors in Neelam Dhawan, who is the chair also of the board, Kaushik Datta as the independent director and head of audit committee, and Sanjay Nayak as the another independent director and head of our NRC. So that's our management and our board structure overall. And with that, I think we are at the end of our deck. Let me just pause there and move to Q&A now.
Sir, good afternoon. I am Mehul.